Okay, this is a little strange. A billionaire named Tim Draper recently increased his wager that Bitcoin will be valued at $250,000 per coin by the conclusion of this year, or at the very least, the beginning of next. You may be familiar with Draper. This is a little odd given that the phrase "Bitcoin is dead" is currently prominent in Google's search results. So, regrettably, Bitcoin will eventually reach zero. China repeated it for the 15th time, and this is how we realize it is true. China is genuinely cautioning people to prepare for an economic catastrophe where Bitcoin will lose all of its value. That's awful news for me, since, as I'll explain below, I just acquired one sole Bitcoin over the weekend. Because the BITI ETF, which allows for shorting or betting against the price of Bitcoin, was issued last week. Moreover, I think that the introduction of this ETF signals a price bottom for Bitcoin. However, Bitcoin has already died 457 times. Welcome to Critique, a channel that gives critical evaluation or analysis, especially in dealing with crypto, everything regarding money, finance, investing, cryptocurrency, and blockchain-related topics including ICOs, NFTs, and yield farming. Please subscribe and share this video. Also, do hit that like button. Elon Musk, the man who created Dogecoin, stated that he is purchasing the dip, particularly Dogecoin. And get this, 3 minutes after he sent his tweet, Dogecoin's price increased from $0.052 to $0.055, which is a small increase. But that resulted in a $350 million boost in Dogecoin's market capitalization. This is crazy. No individual should possess that much authority. He is also being investigated for $258 million for this reason. If you recall, he tweeted the term Doge in December of 2020, which caused the price to soar. Millionaires were made. When he appeared on Saturday Night Live, Dogecoin reached its highest point. At this time, I begged and begged you to think about buying some Dogecoin. He then revealed that it was all a joke, as expected. Everything was a deception, and Dogecoin's value plummeted. People became upset as a result because they would undoubtedly lose a great deal of money. He is being sued because of this. A US crypto corporation also had $100 million stolen from it. Crypto reflects the extremes of two people, which is kind of his thing. One half believes everything is a hoax. Everything will become zero. The other half, on the other hand, declares, "I'll commit felonies only to get my hands on it." Now, in my opinion, crypto is going to zero, although not in the way you think. Over the weekend, some significant changes occurred that will have a significant impact on the price of Bitcoin. I'll demonstrate it using some data. Having said that, let's jump right into today's video. Here, I have some intriguing statistics that may explain why people are concerned about this potential recession, because around 44% of people are concerned about losing their jobs, despite the fact that there are 2 job vacancies for every unemployed person. According to a survey of the whole American workforce, 84% of respondents think that there will be a recession. And even though that's the truth, nobody is at all ready for what might come next. The percentage of Americans without any savings is almost 1 in 4. This is the highest figure recorded in the Bankrate survey's 12-year history. The labor market is therefore extremely vulnerable, even though it appears to be doing well. Interest rates have begun to rise as quickly as necessary to reduce that demand. Because demand will obviously decrease if businesses start letting employees go. So, that is the current issue. But this is the part that interests me the most. Recently, Goldman Sachs updated their forecast for the recession, which is now at 30%. The previous forecast was at 15%. JP Morgan set their odds at 35%, while Citi put them at 50%. I believe that the central bank is the best recession indicator. Remember that they stated that there was an 80% risk of a hard landing when there were 2 consecutive quarters of negative GDP growth. The majority of consumers feel that a recession is already underway even as all of this is taking place. The most likely correct response is that the numbers simply haven't caught up yet. However, crypto is currently experiencing its own breakdown, which I would like to discuss because we are approaching zero. However, not in the manner you imagine. Therefore, let me clarify exactly what I mean. So this is how Bitcoin and other cryptocurrencies are going zero. The largest crypto corporation in the world, Binance, is where it all began. I'm confident you're aware of them before if you're a crypto geek. And if you're not, allow me to explain the situation. Because $7.7 trillion worth of assets was exchanged on their network in 2021, the previous year, $7.7 trillion, not million or billion. That sum of money accounted for about 30% of all crypto activity worldwide. In fact, their network saw value exchanges worth $9 billion just in the last 24 hours. In contrast, FTX, which is just beneath them, is their closest rival, coming in at $1.3 billion in the past 24 hours. Almost 7 times less. In other words, Binance is enormous. They recently stated that they will reduce their costs for Bitcoin spot trading to $0. Here is what that means. You won't be charged any fees as long as you exchange Bitcoin in their platform using USD, USDC, Tether, or Binance as a stablecoin. This is comparable to how Robinhood, back in 2013, completely revolutionized the stock market by allowing us to avoid those annoying $10 commissions. Because spending $10 on a $100 investment means losing $10 immediately. The average investor can essentially get started investing for free. That is equivalent to losing a year's worth of stock market investments. This is what implies for crypto. It is meaningless. Even while I'd like to convince you that this is incredibly bullish for Bitcoin and that it is headed for the moon, the statistical evidence does not support my claim. Even while I would contend that Robinhood significantly contributed to increasing interest in stock market investment, the truth is that, despite the fact that it is now free, more people owned stocks 20 years ago than they do now. Look out for this. 62% of Americans had stock market investments in 2002. Then came the financial crisis of 2008, which sent investors fleeing the markets. Robinhood was introduced in April 2013, the year before we hit a 20-year low with just 52% of people owning stocks. I recall this because at that time, like with many other individuals, I began to get involved in investing. This is the reason why the number of stock owners began to increase after 2013. The most recent Gallup poll indicates that approximately 58% of individuals own stocks as of this writing, 2022. Therefore, even though we have expanded over the past approximately 10 years, the increase has only been about 6%. Compared to 20 years ago, this is still below average. This is enormous for Bitcoin. Even when I'm being a bit of a Debbie Downer about such huge news and the possibility of crypto having no fees, which is wonderful. And this is why. If we don't take a closer look, statistics frequently don't give us the whole story. Consider it in this manner. People earning 6 figures in 2022, those earning $100,000 or more annually, invested in the markets at an 89% rate. In other words, nearly 9 out of 10 people with higher incomes of 6 figures or more had stock market investments, either directly through ownership of a taxable brokerage account or indirectly through their employer-sponsored 401k plan. They had stock ownership. Here's the distinction though. In contrast to Bitcoin, which is a finite resource, the stock market is a limitless resource. We can create an infinite number of stocks and an infinite number of ways to allocate money in the stock market. There are a limited number of Bitcoins available. This indicates that even if Binance is lowering its cost to $0, it won't necessarily result in an increase in customers immediately. It does imply that a few more users will join. However, because there are only a finite number of users, those few individuals will have a much more significant impact on the price of Bitcoin. Consider it in this manner. Binance just launched this whole new fee rates last week, lowering to $0. So, if you think this video has clarified some things for you, please consider liking it and clicking that bell button to be notified of our new videos. Also, you might want to consider subscribing to our channel. It'll really help us out. Back to our video. However, this will spread to other crypto businesses as well, just as it did when Robinhood emerged with no costs. If you recall 2013, there were also Zecco, TradeKing, and a few other apps. However, Robinhood had significantly changed it in a way that attracted a lot of attention. Charles Schwab then followed infidelity, forcing a number of those businesses to follow suit in order to remain competitive. This will also occur in the crypto world. In addition to the indirect custody of Bitcoin through the spot ETF, which will get trillions of dollars in grandpa and grandma retirement funds, bank custody is another significant factor, in my opinion, that will cause Bitcoin's price to rise. Check this out now. They surveyed about 1,700 persons, and 70% of them claimed that if banks handled the Bitcoin for them, they might think about investing in and purchasing Bitcoin. This is really logical, because it seems like there is a Bitcoin heist every week. People are therefore afraid, and grandpa and grandma can't handle the complexity of full influence over your private keys and placing them in cold storage. They don't bother. So, trillions of dollars will enter the market if that situation improves. Banks are allowed to hold Bitcoin, and there is a legal structure in place to support it. Unbelievably, banks have already begun to address that. What I took away from the 2017 financial crisis is that empires grow when there is peace and quiet. The true building takes place when an industry is in disarray. This is the reason I spent the weekend purchasing one complete Bitcoin for $21,000. Because before this, the costliest Bitcoin I had ever purchased was one complete Bitcoin for $30,000 USD. I am keeping my word since I am aware that I stated in public that I would buy much more Bitcoin if it ever fell to $25,000 or below. Even though I overlooked it when it was at $17,500, that is exactly what I am doing. If you like Bitcoin at $30,000, then you might as well love it at $21,000, according to a Warren Buffett quotation. That is not what Warren Buffett said about Bitcoin. He did make a similar statement about stocks. However, the point is that if I think Bitcoin will be worth $100,000 in a year or two, then spending a little bit more now probably won't make a significant difference in the long run. But I didn't really want to inform you that to brag or flex. That's not the genuine reason. I would like you to understand that, despite my best efforts to maintain objectivity and provide you with the most accurate data available, my opinion is ultimately still somewhat tainted. Because even though I'm not selling Bitcoin when people buy it, I'm still profiting on paper. I will say this though, retail customers or individuals like us will not account for the majority of Bitcoin's value when it reaches the level I anticipate it to reach. I believe that most of Bitcoin's value will result from nations and significant businesses adding it to their balance sheets. Therefore, providing you with that clarity in the interim is the best compromise I can make. And with that, this concludes our video. Acquired a lot of knowledge from this, we recommend checking out our other relevant videos from our channel. Also, consider sharing this video to any friends or family members who might find it useful. Until next time!